On the last trading session of Friday, gold spot printed a closing price little above $1,870 per ounce, numbers rounded, and the market is closed. And on the last week, gold traded as low as $1,860 per ounce and as high as $1,879 per ounce, numbers are rounded, and the market is closed. Gold is trading in a bullish trend, and it's below all the daily simple moving averages except the 200 days daily simple moving average. Gold is still trading above this level. The RSI readings, it's moderate on the daily and the weekly, and still little overbought on the monthly chart, and the supports are seen at 1850. If broken, then 1820, then 1800, and the resistance levels are seen at 1900, then 1935, then 1965. That's all. We'll move on now to the economic calendar. On the economic calendar for the coming week, and from the United States, we are waiting for the following economic headers to be released: the services PMI and the manufacturing PMI on Monday, and on Tuesday we got the CB consumer confidence, and on Wednesday we got the core durable goods orders and the retail inventories. That's all. Moving now to the trading strategy. Hi again. We will have a look at the moving averages to see or to get some sort of a technical direction. Usually when the market for any asset, I'm not talking about gold particularly, when this particular asset in a rally, usually the moving averages are in some sort of an order. The 20 days daily simple moving average usually will be the most or the closest to the market price. What do we have right now? There is a disorder of these moving averages, which means the 50 days is higher than the 20 days and the 100 days is higher than the 20 days. This sort of disorder tells you something simple, okay, that this asset is not in a rally and it's taking a breather. It's in a correction, and in the case of gold, the correction is very much justified, especially after this huge move that we have had in the last 2 years to the upside. Usually in gold market, if the 200 days daily simple moving average, which is located about $1,800 spot rate, if it's breached, usually the market will go below this level 6 to 8%. On the fundamentals front, new companies at the moment are racing to introduce their own vaccine. We got Moderna on the last week, and they have a vaccine that works like 95% with a success rate or effectiveness rate of 95%. This sort of news is not good for precious metals, gold, silver, or whatever you name it. It's not good for the precious metals, because precious metals usually have into their price a margin of this price is attributed to the safe haven. So this makes it less appealing, makes the case for gold or silver or any other precious metal less appealing than before these vaccines came into the market. Now the market is actually focused on the airlines, on the energy sector, and drugs manufacturing giants like Pfizer. Gold shall continue declining, but the technical aspect that we talked about and the fundamentals put it together, it gives you a hint that gold should be continuing to decline, at least to reach to the 200 days daily simple moving average. This could happen this week, the other week, the coming week. I give it a timing window of 2 to 3 weeks for gold to reach to about 1800 or 1750, which will be a very good opportunity to buy. That's all for this week. Thank you guys for watching. I'll see you next week in another video.